YouTube, what is going on, man? Welcome back to another daily dose of DTG education. Always giving out the free information and trying to help you level up in your trading using very simple price action methods, techniques, and concepts. And we're going to start on the daily time frame here with an inside bar bearish candle. Now, you guys know I love my inside bar candles. I know you love your inside bar candles. And again, we're going to break down how you can use these inside bar candles. I just said that 3 times in the space of like 10 seconds. But anyhow, how we can use them to get sniper entries on the lower time frames and catch these overall bigger moves in the market and have a high risk reward ratio. So straight away, looking at the daily, we have momentum, we have direction, right? If we're looking at the market from this perspective right here, we're going into the market on this day. We're looking at the previous daily candle is bearish. It's an inside bar. We've tapped into a resistance at the top right here, which, as we can see, left strong wicks and caused this move to the downside. Okay, so we know that if price taps into this area, we could potentially get some more bearish momentum coming in, and that's showing right here with the bearish inside bar daily candle. The next time frame I'm going to go down into is the 12-hour, and again, you guys know I love my 12-hour time frame. It gives us an idea of where, you know, the next 12-hour candle could be heading during London session, during New York session, and it can just give you your daily bias or your session bias instantly within seconds just by looking at the 12-hour time frame itself. Now, because the daily is an inside bar candle, that means that on the lower time frames during that day, gold has been consolidating, right? It didn't break the previous daily highs. It didn't break the previous daily lows. It is in a range between the highs and the lows of the previous daily candle. That all means basically the same thing, but just different wording in order for me to get this across to you exactly what I'm looking at and exactly what I'm thinking. So coming into the next day, I'm looking for some sort of liquidity to be grabbed, right? Because of that consolidation. If we're going to continue to the downside, we need to grab liquidity from either these 12-hour highs or the previous daily highs right here. So I want to see price pull back, creating a daily top wick in the process, grabbing liquidity as well, and then driving back to the downside, breaking previous daily lows and start moving back into the lows down here to the left-hand side. So in terms of my analysis and getting myself set up for the session ahead, that is pretty much it. I've identified direction. I've identified a setup in terms of the inside bar daily bearish candle, and now I've identified some key levels in the market which I want to manipulate in order to grab liquidity, create a daily top wick, and then start driving down. And once that gets met, once those conditions, that criteria gets met, then I'm going to start looking for an entry. This is where we start to get down to business, right? We're on the 15-minute time frame. I have added the line right here, this yellow line, which you can see, which represents where the daily candle closed and the new daily candle opened. And I've also added the PO3 indicator, which overlays the daily candle for us, so we can see how this plays out from a 15-minute perspective, but also watching the daily candle. Eventually, we get the manipulation into one of our key levels that we were waiting for. And we also have now a daily top wick that has been formed. As you can see right here, the current daily candle is bullish, but if this was to start flipping bearish right here, you'd have a very nice daily top wick, grabbing liquidity, manipulating into our key levels. We can start to look at entries coming back down, trying to capture this top wick for this current daily candle and ride this thing down, wait for it to flip down here, continue breaking the lows and giving us a beautiful risk to reward ratio trade. Now comes the most difficult part in trading: execution, finding an actual entry into the market, because we can do analysis all day long, but when it comes to entry, this is where most people struggle, end up second guessing themselves and not getting themselves over the line with an entry and into the market to execute on their analysis. So first thing I'm going to do is turn on the DTG Algo V5. And as you can see, it has overlaid this level for us right here. This is a key level. This is called an AOI, an area of interest. And the way we trade this in the DTG Academy with the DTG Algo is look for a break and a tap below this area. So at this point, we've formed the top wick, we've grabbed liquidity from key areas of the market, and now we're looking for an entry to take this back down. And we're going to wait for a closure below this key level, just like that. Perfect. So that's a 30-minute closure below the AOI level. And now what we want to see within the next candle is that it comes back and taps this level first, right? Which is exactly what it has done right there. Tapped in. And now if it breaks the previous candle lows by about 3 or 4 pips, we will be in a position right here to the downside, executing on our analysis. All right, there we go. Price has broke the lows by a few pips. So we would be in an entry right there with a stop loss above the previous 30-minute candle high. And we're going to target previous daily lows and maybe even beyond, actually, because once we do get a break of these inside bar daily candle lows, you know there's volume going to be coming into the market. That's it, would be triggered in that trade. We have done our analysis, we've executed on our analysis. Now the only thing left to do is see how it plays out. At this point, I'll be moving stops to break even, right? We are 250 or so pips in profit. I'm definitely moving stops to break even right there. I'm going to let this play. You could even take some partials here if you wanted to. There we go. There's the break of the previous daily low. So that's important because now we can anticipate from this area, volume could be coming in because we have broken the previous daily bearish inside bar candle lows. We can see now from the daily perspective over here that the daily candle has created a beautiful top wick. It's now reflipped bearish, broken its own lows, broken previous daily lows, and it's looking like we could see quite an extensive move to the downside here. Let's see how the rest plays out. All right, let's have a look. So we've currently hit a 1 to 10 risk to reward ratio for over 700 pips here from this move. Trading can really be this simple if you have a clear process, a clear trading plan with a trade management, risk management plan, and you are disciplined and consistent enough to keep executing on it day by day, week by week, month by month, year by year. You don't really have to catch too many of these trades, you know, just focus on one setup a week. Maybe if you look at 2 or 3, 4 different pairs, wait for those daily inside bar candles, 12-hour inside bar candles, maybe even 4-hour inside bar candles, build your confluence, look for your entries with the DTG algo, execute, manage the trade, let it play out, look for a 1 to 2, 1 to 3, or in this case, a 1 to 10 risk reward ratio. So that just about concludes the video. If you guys are interested in the DTG algo and how it can help you get consistent entries into the market, the link is down below. Also, if you want to join my free signals, the link will be down in the description. Come and join us over here in the DTG Academy. Take a look at the reviews, take a look at the results. They speak for themselves. I don't really have to say too much. And as always, man, thank you guys for watching. If you have any questions, leave them down below. Please make sure to like, subscribe to the channel, and I'll see you in the next video.